You would never have thought the government embracing gold and silver, calling it critical, importing it. Judy Shelton telling us it's going to be tied to the bond market in less than a year. You look at all of these things and you say, is it gotten to the point where they've realized that things are going to change, that we are in the midst of a new monetary system a la the Genius Act, and that indeed it is about he or she who owns the commodities wins, and there's no sense in hiding it any longer?
The miners are only producing about 850 million ounces a year, and we're consuming like 1.2 billion. So these ounces are coming from somewhere. They're coming from, investment hoards or governments, but that's going to end, and we have to see higher prices too. I think we're so close to $55 last week that the market just had to kind of do one more sell-off, to drive it down a little bit, and it's destined to go through new highs here, and whether it hits 60, 65 by the end of the year, I wouldn't be all surprised.
As central banks worldwide accelerate gold purchases, adding over 634 tons in the first 9 months of 2025 alone, with projections for another 1,000-plus ton year amid de-dollarization trends, the precious metal continues its historic rally, defying high prices and signaling systemic shifts. Recent U.S. policy designated silver a critical mineral in 2025, enabling strategic stockpiling and potential subsidies, while China imposed stricter export controls on silver, tightening global supply. Meanwhile, repo market stresses saw the Federal Reserve inject tens of billions in liquidity in early November 2025, echoing crisis-era interventions despite ample reserves, fueling concerns over interbank trust and broader financial fractures. In this exclusive clip, AndySchectman, CEO of Miles Franklin Precious Metals, warns that massive repo injections, reaching crisis levels reminiscent of 2008 and 2019, are not about liquidity shortages, but a profound lack of trust among major banks, who now refuse even overnight lending. Schectman highlights elite signals. Institutional giants like Jeffrey Gundlach and Bank of America recommending up to 25% gold allocations. Morgan Stanley advocating a 60-20-20 portfolio with 20% in gold and silver, surging U.S. gold imports, government embrace of precious metals as strategic assets, and informed players front-running a new commodity-backed monetary era, urging viewers that, little by little, then all at once, physical gold and silver ownership is the ultimate winner as the system pivots. Let's watch clips from AndySchectman's explosive interview to gain more insight. Don't forget to like, subscribe, and enable notifications for additional in-depth content. Thanks for joining us again. Enjoy the video.
Something is happening in my mind beneath the surface of the financial system because over a 5-day stretch over the last 2 weeks, the Federal Reserve injected $125 billion into the repo market, and the popular talking heads would say it was to ease funding stress, as we saw in 2019 with the repo market problems, in 2008 with the fail of Lehman Brothers and the great financial crisis. But it's important to understand that $125 billion, especially over a few days, over a period of 5 days, is akin to crisis-like behavior. It's on par with what we saw when Lehman fell. It's on par to the 2019 blowout in the repo market. When the Fed steps in with huge amounts of cash, mind you, typically, if there's no stress, you won't see much of any movement in the repo market or usage of it. If there's a little bit of stress, you might see 3, 4, 5 billion put into it or trading in it. If there's moderate stress, maybe 10, 12 billion. At 125 billion, it's the equivalent of hearing loud banging noise every time you turn your water on in the walls. Something's not right. Something's not flowing right. But what makes this concerning and very different than what we saw in 2008 and 2019 is that in 2008 and 2019, it was an issue of liquidity or lack thereof. Now, this is not a we're out of money problem. Today, the big banks that would trade in the repo market actually have twice the reserves that they had during the 2019 repo crisis. And in this environment, the Fed would rarely, if ever, inject liquidity into the overnight market when reserves are this high. In this environment, repo injection should be near zero because the banks have enough money to trade with one another back and forth. It's just overnight exchanging collateral, typically treasuries, sometimes mortgage-backed securities or whatnot. But this isn't about money. It's about trust or lack thereof. And in essence, then again, banks are looking at each other and saying, not a chance in the world am I going to borrow anything or lend anything to you, or not even for one night. And because I'm not sure you're going to pay me back tomorrow morning. And the reason this matters is because you typically only see repo market stress right before market corrections. And that's an ominous sign. It's an ominous sign in that this is all about the lack of trust. And when the most well-informed traders on the planet, the very, very large commercial banks, are saying, you know what, I'm not lending my money into this system. I'll just park it at the Fed instead. I am not going to do it. And you start to see the overnight lending system dry up. It portrays, I think, serious fractures within the entire system and is far more concerning than just a lack of liquidity. It's a lack of trust, which is far more systemic and troubling. Look at the highest levels. We've talked about Michael Harden at Bank of America saying 25% in gold. We've talked about Jeffrey Gundlach, the bond king. 25% in gold is not overweight. We talked about the chief investment officer for Morgan Stanley, 20%. Sell half your bonds instead of 60-40 gold, silver, 60-40 stock bond. He said sell half your bonds and put 20% in gold. Now, we've never seen that before. These are people talking to the institutional clients at the highest level. Look at all the importing of gold into the country since last November. Billions and billions and billions and billions and billions of dollars worth. Who's doing it? I'll tell you who's doing it. People who know the playbook. People who don't do things just for the heck of it. Look at the fact that the United States not only has just classified silver as strategic metal, look at the investment by the United States government in the resource sector, in the mining companies, taking positions in some of these big companies to build strategic stockpiles of critical metals. In other words, the things that you and I have talked about for a long time that we were mocked at because, well, Wall Street would never recommend even 5%. Now they're saying 25% is cool and not overweight. Look at the fact that the government, who would have thought you would never have thought the government who we talk about the antithesis of the dollar. They are now embracing gold and silver, calling it critical, importing it. Judy Shelton telling us it's going to be tied to the bond market in less than a year. You look at all of these things and you say, is it gotten to the point where they've realized that things are going to change, that we are in the midst of a new monetary system, a la the Genius Act, and that indeed it is about he or she who owns the commodities wins, and there's no sense in hiding it any longer? It's almost like they've done an about face, quietly, not in your face, but if you look and research the same way you and I do, you see it. You may not see it watching Jim Cramer or watching Fox News yet, but you will begin to see it. Even they are talking about the debasement trade. You're hearing that on mainstream. You're seeing Walmart and Costco sell gold and not be able to keep it in stock. It's beginning to become more accepted. But when you see the U.S. government call silver a critical mineral, you have now put policy and national security as a floor under the price of silver. And then China pushes back as maybe the largest exporter in the world, says, you know what, every ounce of silver that comes out of this country has to get permission and permitted through Beijing. That's going to massively slow down exports. You can see it everywhere. I think this time largely is different. Beware of the guy who says this time it's different. I realize that. But I think it is different this time. And you can see it by the pivoting from the most well-informed commercial banks and speaking to their institutional clients all the way up to the government, all the way up to the draining of the world's exchanges, and the people who are standing for delivery on COMEX, on the LBMA, and on the Shanghai Metals Exchange. These are not just normal Joe and Jane citizen. These are the most well-informed and well-funded traders in the world who know what's coming and are front-running, positioning themselves before the herd. It's becoming different every day. Little by little, as we often say, little by little, and then all at once, I think is very appropriate right now.
As silver hovers near $50 to $51 per ounce, exceeding 200 million ounces annually for the fifth straight year, central banks continue aggressive gold accumulation, with over 800 tons added year-to-date through October 2025, led by Turkey, India, and Poland. Surging industrial offtake from solar, EVs, AI data centers, and a resurgent nuclear sector combined with constrained mine supply and massive imports into India, has created the tightest physical market in decades, while the US maintains silver's critical mineral designation and China restricts exports. In this powerful interview, KeithNeumeyer, founder and CEO of First Majestic Silver, explains why the recent move past $50, now consolidating, is fundamentally different from the 2011 short squeeze parabola. This rally is driven purely by physical demand. Neumeyer highlights exploding industrial consumption that can't be recycled, multi-year billion-ounce deficits, and awakening recognition of silver's irreplaceable role, predicting new all-time highs soon, with $60 to $65 by year-end very possible as the supply crunch intensifies. Let's watch clips from his interview.
Let's talk silver. We've been mentioning $50 silver.
Yeah.
It's been a while since we spoke. Like, what caused that last move, the last leg higher, the last 25%?
Yeah, it's different because, I remember the move, that took place between 2009 and 2011. And, when silver broke out, through $30, back in early, I guess it was, early 2011, that whole move from $30 to $50 is basically short covering. The banks got completely caught offside. That was all paper driven. And that's why it ended so quickly, because it was driven by short covering. And this rally that we've seen over the last few months is all physical demand. It's completely different. People are waking. The United States government is deemed silver as a critical mineral, as you probably know, and I think that woke up a lot of people. And people are now saying, "Hey, look, this metal is really, really important for things like this." And we're not going to travel, we're not going to be able to drive, we're not going to be able to operate our homes, or whatever the case may be. Silver is a very critical metal, and people are waking up to that fact. So it's pretty exciting to see. It happened a little more quickly than I would probably liked, because it did get a little bit parabolic, and it needed to see a correction, and we're seeing that now. But it's going to settle, and who knows what we'll end up with at the end of the year, but likely higher than it's currently trading. And so silver took a little bit of time, because people were waking up to gold and seeing it hitting new highs all the time, and what's the brother to gold? Even though I don't look at silver as I do look at gold, I think they're totally different. I look at gold as a currency. I look at silver as an industrial metal that's required for all the things that we need to do, electrifying the plant and so on and so forth. So I treat them differently, but the market woke up to it. So it was quite exciting to see. Going back when, during Trump, when Trump was talking about tariffs in the U.S. And so a lot of the metal moved from Europe to New York or the United States, COMEX or whatever. And that included silver as well. And then all that had to be unwound, quite quickly, because all of a sudden the London market starts to get issues with deliveries. And interestingly enough, if you look at the Shanghai numbers, and because I see the Shanghai reports every week, and Shanghai warehouses are now down to 2015 levels, which is crazy. So, this silver is being consumed in industry and is being moved around, and it is a bit of a bulky metal, and but it does get consumed, and that's different, as I said earlier, than gold, and because you don't recycle cell phones, you don't recycle computers. A lot of this silver that we consume just gets thrown in waste dumps. And it's getting a real problem, and we've now had 5 years of deficits in the silver market. The deficit on a combined basis over that period of time is close to 1 billion ounces. The miners are only producing about 850 million ounces a year, and we're consuming like 1.2 billion. So these ounces are coming from somewhere. They're coming from investment hoards or governments, but that's going to end, and we have to see higher prices too. And I've said it a dozen times to get the miners, the mining companies, to start producing more metal to fill that gap. But we're not going to do it at $50 silver. I think there was like 75 million ounces of silver or something shipped to India over the last couple of months, which is quite amazing when you're only producing 850 million ounces a year. So but it's all in industrial. Like you just look at AI, for example. You're building all these data centers. How are you going to do that without silver? The nuclear renaissance. And now governments are talking about turning back nuclear back onto the grid and building new nuclear plants. I think there's something like 30 nuclear plants planned for. There's a major announcement that came out of Westinghouse, just recently.
An $80 billion deal with the U.S. Department of War, I believe it was.
Yeah. So this is exciting stuff, and these nuclear power plants require silver. They're not going to operate without silver. I think I was asked in January, February this year what my prediction was for the end of 2025, and I said $40, or at least I think I said $40.
Yeah.
And we blew through that like butter. I think we're going to see new highs. I think we're so close to $55 last week that the market just had to kind of do one more sell-off to drive it down a little bit. And it's destined to go through new highs here. And, whether it hits 60, 65 by the end of the year, I wouldn't be all surprised.
Yeah. AndySchectman sees the financial system's cracking foundation. Massive repo injections signal collapsing interbank trust, while elite institutions and governments quietly pivot to 20 to 25% gold and silver allocations, front-running a commodity-backed monetary reset. KeithNeumeyer stresses silver's unstoppable physical squeeze. 5 straight years of billion-ounce deficits, non-recyclable industrial consumption, solar, EVs, AI, nuclear, and shrinking exchange stocks guarantee explosive prices. $60 to $65 by year-end is realistic as supply simply vanishes. Together, both warn, the era of fiat confidence is ending fast. If you found their breakdown helpful and want to stay ahead of these historic market moves, make sure to like, subscribe, and turn on notifications so you never miss an update. Your support helps the channel grow and keeps you informed when the markets shift next.